Hey traders, so welcome to this stage 3 where I'll be talking to you about the creation of liquidity. So moving on from the idea of the order block for the previous video, we will make use of an uptrend in this case, for example. And if prices comes back down to this, it doesn't matter if you're retail or smart money concept trader, but in this case we'll be talking about smart money concepts. So can you imagine that this is an order block, and as prices comes back down, this is just a one directional move, correct? And the problem with this sort of a move in terms of retail trading standpoint, right, is that this is a strong bearish momentum, correct? And that is not the case for how the smart money concepts or the smart money traders view this. This one directional down move doesn't create liquidity for prices to incentivize prices to move higher. So what do I mean by that? In this strong down move, there are almost no participants in terms of buying or selling, because it's just a one directional move, and maybe there are sellers all around here, but their stop loss, can you imagine that their stop losses is just mainly at this area? Meanwhile, if you were to compare to this move over here into an order block, let's say it's something like this, breaks out, and if you see a move like this creates lots of action or participants in both sides of the market, correct? And you do have orders lying above these highs, correct? And it's yet to be taken out. So what do I mean by that? If you were to see a strong move that breaks out of structure, there is so much orders or buying and selling exchanged inside of here, because there are prices and targets for you to be met, correct? And prices push higher. All of these orders serves as a potential exchange, and this incentivizes prices to move higher because there are orders and targets for you to hit. And meanwhile, for this, you will want to buy over here because you are likely to be able to take out your profits when above this high, correct? And it is easy in this case with so much selling over here and only sells participating inside here for prices to move down into another zone. So what do I mean by that? So can you imagine instead this happens? So with all this strong selling, towards once it breaks this level, it starts to accumulate. What do I mean by that? It starts to create liquidity, which is what you want to see here in the first place, correct? And this only starts happening after the break of structure. And this actually tells you that prices wants to go to somewhere lower, because this is an area of demand where prices or institutional traders are actually looking at. So the creation of liquidity only happens towards the second zone, and this is where you can look to participate, because in return it creates orders over here. And when it creates orders over here, stop losses can be placed above these levels, so there are equal participations in and out of this market for prices to move higher, because it incentivizes the buying over here. So let me remove all this. So the creation of liquidity comes in many ways. Can you see this is an uptrend again? And when prices comes back to this level, instead of seeing this move, you want to see something like this, because this serves as a falling wedge, and a falling wedge is also the creation of liquidity. And you can imagine another example over here. You can see like a triangle. Okay, and this creates liquidity as well, because people are trying to participate here. And can you imagine orders over here? Stop losses and buy stops. So in this case, it is very easy for prices to make a move down, clearing all of these orders before moving up, because this incentivizes, or then again, you know, this institutional move over here, this is the sell to buy move that we talked about on our previous video, right? Because there are orders lying above here, they want to hedge their positions because they want to get in at the best price and buy even more over here. So imagine the same theory, they sell let's say 3,000 orders over here, and they buy 6,000 over here, because they can there is enough orders to exchange for their 6,000 of contracts, okay, to push prices higher. And when it breaks out, they are able to clear off these levels to take profits because they are selling positions over here for prices to exchange. So when prices moves over here, they are able to cash out their profits, correct? And prices will come back eventually to mitigate their first selling position over here. So at this point of time, it breaks even, and this creates the next sell to buy move for prices to come back here to mitigate their positions, getting them out at break even before buying again. So this is how you can pair up your order blocks with the creation of liquidity. And another way would be, for example, head and shoulders. So the reason why head and shoulders for retail trading works, right, is because this is, let's say, the supply zone. When the prices comes back here, can you see this is creation of liquidity? Then you see a move down, maybe tapping into this order block, pushing prices up, then breaks down. So this is the creation of liquidity at the same time, because you can see that there are stop losses below here, stop losses, stop losses, stop losses, and stop losses in terms of trend lines. Right? So this is an upwards channel which can be viewed as a head and shoulders as well. So the idea behind is not about the price action pattern or like wedge pattern, flag pattern, or whatsoever. It's more of the creation of liquidity created when you see swing highs and swing lows like this. So it doesn't matter what kind of structural pattern you can see, that it clearly creates highs and lows for buyers and sellers to participate in, right? So this is to incentivize selling and buying. And when prices comes back up, you will usually sell over here because this is a supply zone that may have been created from this move down. So this is the transfer of selling or buying to selling, because you need prices to create liquidity for an exchange of orders as prices clears this low. Okay, so this is the idea of the creation of liquidity.